Hey guys, my name is Keith. I thought I'd talk about how I diversify and separate my portfolios on this video. Okay, the way I do it, I have three portfolios, all right, uh, or three different accounts. This is how I separate it. So one account is for a long-term holding. The second one is for midterm holding. Third one is for short-term holdings. So for my long-term holdings, what I'll do is essentially I'll put money into a S&P 500 index fund. So for those of you who don't know what that is, S&P 500 is it's an index. So it's just like a list and a tracker, right? That tracks the best 500 companies in America. And there's a committee that selects who those 500 companies are, and there are some rules. For example, they must have 4 quarters of profitability, and so on. If you look at the top 10 holdings, they've been different every decade. Right now, it's Amazon, Apple, and Facebook, Microsoft. But about 20 years ago, none of those tech companies were on there. So the good thing about that is you don't have to do stock picking. You can just if you were just going to work, you can do your 9 to 5 and put in like $100 or $200 bi-weekly or whatever you can, and then over the long term, it's gonna grow. And this is something that Warren Buffett recommends as well, right? Even for like the average trader or average investor, I mean. So in my long-term portfolio, I had the one I choose is VFV, Victor Foxtrot Victor. That's S&P 500 index fund from Vanguard. And another one that I have in my long-term portfolio is Berkshire Hathaway's common stock B stock. So that's BRK.B. Since that's his company and he's well known for long-term compounding interest, something that I believe in. And it's done extremely well over his whole lifetime. So that's something that I also invest my money in. I do small increments, and then it just goes into that. Now, in my midterm portfolio, what I invest in is things that I truly believe will dominate the world, that will change the world and disrupt industries. For example, in the early 2000s, Apple disrupted the industry for telephone, right? They brought the computer to the telephone, and that's a big deal. Amazon, from 2010 onward, disrupted the retail industry and brought everything online with one-day shipping, and it was a big deal, and they've done extremely well, right? And those type of companies, they come and go, but when you see them and you believe that they're going to disrupt the world, that's something that I would invest in, right? So then in my midterm portfolio, what I have right now in 2020 is Tesla, because I feel like Tesla is on its way to disrupting, and is currently disrupting the EV market and energy market as well. So that's what I have in my midterm portfolio. Just one company is okay. Even Warren Buffett himself says you don't need to invest in 50 different companies, because if you do that, your average return on your portfolio is going to be very minimal. Sometimes it's mostly going to be less than what the S&P 500 would return. So it's good enough to have a handful of stocks that you've done research in and believe in. So yeah, long-term portfolio, S&P 500 index fund, and Warren Buffett's stock. And in my midterm portfolio, I'm just holding Tesla. Second stock that I'm holding in, but a small position in, is Square, because I feel like they can and have the ability to disrupt an industry, but I haven't seen anything from them yet. So for now, it's just a small position in Square and a large position in Tesla. And then there I have my small portfolio, my short-term portfolio. This is where I do, and I go back and forth between value investing and swing trading. So I only do swing tradings for like earnings reports. And for those of you who don't know what I'm talking about, I'll start off with value investing first. So the way that works is you don't need to look at a chart. You don't need to look at what the price of a stock is either. You find the SEC filings of a stock. So for example, you go to sec.gov, so sec.gov, and then you can type in a company's ticker name. A ticker is for example, Facebook's ticker symbol is FB. So every company has a ticker symbol that you can use to search for the company stock, right? So you can use the ticker symbol or type in the company name, find the company, and then you can look at the balance sheet, because all of this information is publicly available to everyone. So you can see, hey, how much cash do they have? How much debt do they have? Right? What liabilities are there? How many assets do they have? You can look at all of these things, and then based on these things, and based on how much revenue they make, or if they're profitable or not, you can make an educated guess. Pretty much that's what it is, an educated guess onto what you think the fair value of the stock is, so how much it should be trading at, right? And once you know that, whether the stock goes down or up, you're not going to sell, and it just gives you confidence to hold on to it. So that's what I do in my small term portfolio, and I try to maximize on my gains through that. Another thing I do is sometimes swing trading. So if I know, this is on the technical analysis side, I don't do too much of it at all. Mostly it's just investing, but here and there, if I see anything good. But the more and more I do value investing, the less and less I do of this. But yeah, so it's something you guys can look on. There's a lot of YouTubers that talk about it too, but I think it's a safer bet to go with value investing because it works, right? Obviously, there's a reason why I separated my portfolio this way, because in the long-term portfolio, that's what's going to work 100%, right? Or 99.99%. S&P 500 index fund has always outperformed most portfolio managers, if not all of them, right? And it's easy. You don't have to do any research. You don't have to think about anything. Just put your money in. It's like a savings account. Your midterm portfolio, you do have to do a little bit of research, but it's pretty obvious who is dominating, right, in the industry. Like, if you're using Amazon and everyone else starting to use Amazon, you can see, okay, wow, this company is growing, and you'll start to have more of a sense of an understanding of how companies disrupt an industry, right? But yeah, so these are the 3 different ways that I separate my portfolios. Subscribe if you guys want. Give it a thumbs up. I would really appreciate that. And let me know if you guys have any questions and how you guys separate your portfolios. I'd like to know. So just comment down below. All right. Thank you. Take care.